Good evening, my fellow citizens. I'd like to take a moment to introduce this series. I have decided to talk about taxes, and this video, and the ones that will soon follow, will be taking a look at federal taxes. I had to put some research into this, as I am rather new at sticking my neck out in political conversations, and so I have done some investigation with various sources that I will provide. Due to the difficulty at finding a list that has all of the US taxes, I might leave some out that I would love to talk about had I known they existed. Please feel free to leave any data I am missing in my reports in the comment section. With that said, let us dive in and let us talk about income tax. The burden on U.S. citizens is too high. Citizens struggle to climb the wealth ladder, especially those that rely on the government. By easing the burdens on the citizens when it comes to taxes, specifically on taxes that are derived from their income, it would encourage economic growth with citizens more willing to spend more money. It would also create more class mobility, making it easier to collect more wealth by the poor. The answer to have the poor not be so poor is not by government handouts that strain the economy and overall productivity of the country, even if it does seem to be the most pragmatic and helpful. I mean, it only makes sense to give a poor person the thing he lacks, but this only raises taxes on everyone to shoulder the burden here. I think it would make more sense to employ everyone and drop the taxes that cause people that run into problems like not having enough money to pay bills or buy food despite having a job. These are ideas that I stand on. Give a man a fish, feed him for a day. Teach a man to fish, feed him for a lifetime. I would talk more on things that could also be taken out of government spending and programs that could actually help poor people thrive more than just a simple taxable handout, but that is for a different video. For now, we are talking about tax reduction. What is federal income tax? Well, according to Investopedia, income tax is levied on the earnings of individuals, corporations, trusts, and other legal entities, and it applies to all forms of earnings, such as wages, salaries, commissions, bonuses, tips, investment incomes, and some unearned incomes. Some of these things sound fair, some not so much. It really depends on who you're talking to. To me, I don't think it's fair that commissions, bonuses, and tips are taxed at all. But I also know the ingenuity of business people. If you alter one of these taxes in a certain way, it may have unforeseen outcomes, like maybe half the companies switch to commission-based pay instead of salaries to make workers happier if the commission was omitted from application of federal income tax. However, that is rather drastic and highly unlikely to happen. So with this definition, we see a broad net cast on various forms of incomes that result in different income taxes, such as corporate income tax. So what's the impact? Well, most people care about the taxes that they are paying. So let's take a look at individual federal income tax. According to Data Lab, the U.S. government collected about $4.05 trillion in total revenue. $1.7 trillion, or 47.61% of this revenue, comes from individual income tax, with tax brackets from different incomes set at 10, 12, 22, 24, 32, 35, and 37% as of 2022. The rich with vastly more wealth, of course, pays way more in taxes than the poor does, even if the rates were the same. But the rates at which they pay taxes as an individual is almost quadruple the taxes of the poorest of people that have jobs. That is, quadruple the percentage of their income, not quadruple the amount they pay. Say someone gets paid $1,000 a month, that's $12,000 a year. That's below the poverty line. They only pay $100 a month, totaling of $1,200 a year on taxes, because they are in the lowest tax bracket. So they pay 10% of their income towards federal income tax. However, a super rich guy being paid $100,000 a month or $1,200,000 a year pays $37,000 a month, or totaling $444,000 a year in taxes. See, this is quadruple in percentage, not quadruple in total pay. He pays more in taxes than you'll make in an entire year or a couple of years. This, of course, is only looking at individual income taxes and not even looking at corporate taxes or gift taxes. So, what about poverty? The poverty line sits at $12,490 yearly income for a single person. Anyone that earns less than this is considered impoverished, like the numbers I just said earlier. Earning from a low-end job for unskilled laborers, they often find that there's sometimes a tug-of-war with getting enough hours to work, often resulting in the low-end job laborers looking to work 2 to 3 jobs at the same time to meet minimum living standards. Many citizens find that they work too much, often burning out, just getting enough to float by without gaining enough skills to get a job that isn't low-end to make more money without a second job. Upward mobility isn't flexible enough to lower the need of helping the people who make money but below the poverty line. A revisit to lowering taxes is needed. Or, perhaps, abolish federal income tax. According to Cato, if these taxes were abolished, it would drive up economic growth, as could drive down consumer prices, according to economist Dale Jorgensen of Harvard. He also suggests that if taxes involved in fuel and investing was done away with, it would also increase business competition. So I'd like to think that because of lowered or abolished taxes, people would have more money to spend and more money to thrive, thus driving up economic growth. If it were easier to start and maintain a business, then it would create competition, which may sound rough to how competition can end up in other areas like animal survival. However, this in reality is good for the consumers because businesses will try to one-up each other to get more customers by either upping quality or dropping prices. And with more businesses, you get a diversity of options. Now, if this happened while the consumers had, by and large, more wealth to spend, it would be a win for everybody at the expense of the government. As I have said, if we cut a few unnecessary programs and lower taxes, then the government wouldn't even need to spend so much in aid if they no longer created the troubles that caused the need for the aid in the first place, such as income tax. But that is for another video. Next, we shall talk about all the federal phone taxes. Again, as I said, it's pretty hard to find a list of all the taxes in the U.S., just a straight list, but out of the taxes that I saw 3 federal telephone taxes. Telephone federal excise tax, a telephone surcharge tax, a telephone federal universal service fee tax. Now, these taxes aren't levied onto the individual. They were actually levied onto the telephone companies by the FCC to make services more widespread by taxing them to pay them to spend at schools and libraries. Indeed, while looking into the legal definition of these taxes at U.S. Legal, I came to this realization. The FCC, a federal program, levied a tax onto phone companies to fund communication services to schools, libraries, and other public services. So, in short, the federal government took money from these governments to then pay them with their own money to put their services into public buildings. Depending on companies, they would just push the tax onto their customers to get their money back. To me, this made no sense, other than to forcibly modernize the public setting, but this makes no sense if phone companies are already big enough and competitive enough to reach out to these public spaces in the first place. I do not think this needs government interference. No need to tax a company that wouldn't mind getting into another contract anyway. So, what's the impact? Well, National Priorities has tried to make a pie chart of the total revenue of the federal government. The pie chart shows 5 different categories. Individual income tax at $1.7 trillion, or about 47%. Social insurance and retirement tax at $1.3 trillion, or 36.2%. Corporate income tax at $268.48 billion, or 7.5%. Excess tax at $74.09 billion, or 2.07%. And other areas of revenue at $237.9 $6.11 billion, or 6.62%. Since the telephone taxes have been labeled as excise, then that means they contribute to the $74 billion that is then redistributed through the FCC. Some of the funds being used to pay the program itself as well. I elect that we abolish this tax, or these taxes. In the modern year, it makes no sense for this tax to exist. Not much would change getting rid of this tax, but every little bit adds up. For the rich folks, we'll talk about generational skipping tax. So this is used, as according to Investopedia, a way to close a loophole that wealthy people would avoid inheritance tax and estate tax by gifting the estate to the grandchildren. I'd like to talk more about estate taxes. It is defined as, well, it's not a tax on property per se, it's a tax imposed on the privilege of transmitting property upon the death of the owner. This is by Burr.gov. You have to calculate the total value, and when the value goes over a certain threshold, it gets taxed, and the rest of the assets goes to the beneficiaries. I believe this handling of the estate and asset transfers should be left to the local governments and perhaps businesses that would cater to these services at a price, maybe a lump together with life insurance. There normally isn't a federal tax unless the estate is over $10 million. Then this tax is set up to 40%. All other state taxes are handled by state and local governments. I believe that local governments is where this kind of matter should stay, even in cases where the estate is in the millions. The amount of estates that reach over the threshold isn't very many and can't contribute much to the federal revenue despite the high tax rate. It would be better to contribute to local government, maybe state government. I elect that generational skipping and estate taxes be taken off of federal revenue. Since this isn't a property tax and the one gifting the estate has to die, I would rather these taxes be abolished, but they may benefit local governments greatly, since it doesn't benefit the federal government much to begin with, only to the beneficiaries of the estates. Why punish them? Why take nearly half of the heir's belongings? We have reached the end of this video, and that's it. I want to continue talking about federal taxes in the next video or two, after which I will move on to state-level taxes and then into local government taxes. This will be the basis of my tax plan. My research doesn't span years, and I may succumb to some mistakes in understanding how some taxes work. So please, let me know in the comments. Point me to your sources as well. Let us go into a great future together. I'm Alex Yoder. See you next time.